today's lesson is going to be about how to use the 200 period moving average in your trading. If you've never heard me talk about this, it should be very, very eye-opening, and you're going to love it. So make sure to stick around until the end. It will only take about maybe 10 minutes, okay? Depending on the questions. If you have any questions, make sure to type them into the comments so I can get back to you later on, or send an email to info@t3live.com and they can forward that email to me. So info@t3live.com, okay? So today we're gonna, as I said, talk about how to use the 200 period moving average in your trading. First thing people ask is it simple or is it exponential? I'm telling you, simple is the way to go. Not because, I know simple sounds, oh, that's simple, that's old style. Exponential sounds a lot more sexy. It does, but simple is what most people use. So when you're looking at charts, we don't trade stocks, we trade people. So you're trying to see what they're seeing, what they're looking at, and make a decision about whether to enter or exit a trade based on what other people are doing. Now, if you want to know what they're doing and what they're seeing, you want to use the same tools. So that's why I use simple, not exponential. But it doesn't matter. You want to use exponential? Go for it. Just make sure you use exponential on every time frame. Okay, not simple on some charts and exponential on other charts. So I use simple. I'm a simple guy. I use simple. So do whatever you want. All right. So first, the first way to use it is by using it as support and resistance. Think of the 200 MA as a floor to stocks above it. So when it falls, it becomes support. When a stock falls to the 200 MA, it becomes support. And a ceiling to stocks below it. So when it rallies, when a stock rallies into it, it's going to act as resistance. It's a line in the sand. If a stock drops to it, it's going to act as support. If it rallies into it, it's going to act as resistance. While the 20 MA is most powerful when it's trending, the 200 MA is strongest when it's flat. So flatness is king. Remember, a level floor is always preferable to a slanted one. Just always remember that. So take a look at this chart and see how the stock dropped multiple bars in a row, vertical almost, into the 200 MA on the 5 minute. And it also did the same thing on the 15. So when you get a multi-bar drop on multiple time frames into the 200, that's a buy. It's not just, it's on 2 time frames. And as you can see, the stock bounced right back up. Now the same thing here. The stock gapped down and then rallied into the flat 200 on the 5 minute, rallied also into the flat 200 on the 15. Close your eyes and short the stock. I mean, I do. I don't close my eyes physically, but I feel as sure about it as anything when I get a multi-bar rally into a flat 200, especially when it's on multiple time frames. Notice on this chart, we a 15-minute time frame, down. Notice the spike in volume there, which is indicative of a bottom already, because that's capitulation. Wider range bar followed by a doji bar, and then again up from there. So use as support. The second way to use it is as a gap strategy. Buy at the open stocks gapping up just above a flat 200 on the daily chart, almost regardless of the quality of the gap. Okay? Almost regardless of the quality of the gap. Short at the open, stocks gapping just below a flat 200 on the daily. Almost regardless of the quality of the gap. If it's a high quality gap, so much the better. But if it isn't, you can still do it. Here's a good example. This stock gapped over a red bar, big red bar, which means traders were already trapped. But when the stock gaps over a red bar, guess what? That's people shorting it, selling it. So when it gapped up today, they were trapped. And not only that, it gapped just over flat 200. Bam! And then took off. Got bought. Likewise here, stock gapped from over a red bar, over the 200 into resistance. Didn't matter. Went higher for several days in a row. Same here. Gapped up over the 200, slightly above it, so it pulled back a little bit. That's why you see the tail. When it gaps right above it is when I really like it. When it gaps just a little bit above it, then sometimes I wait for a pullback on the intraday time frame before I get in it. This is your favorite stock, Tesla, gapped over the 200, and then from there took off. Of course, this was a couple months ago. Tesla now it tripled in 2-3 months. So that's Tesla over the 200. And notice here, the stock gap just under the 200, flat 200. Notice to the left there was support. Didn't matter. Bam! Sliced through it like a hot knife through butter. Under the 200 also dropped. Beautiful. So it acts as resistance when a stock actually gaps below it. When it gaps well below it, expect it to go up a little bit into it, and especially if it's not a flat 200. The red line is the 200. So not quite flat. And here too, beautiful. Short. This was a little bit below it, but still worked. So far we said use as support or resistance. So if you have a multi-bar drop into a flat 200, that's going to act as support. If you have a multi-bar rally into a flat 200, it's going to act as resistance. Especially so if you get the 200 on multiple time frames. Sometimes it coincides on the 5, the 15, the 2. I've seen it many times. When that's the case, I said I close my eyes and I buy or short the stock. That's the first way. The second way is is as a gap strategy. So you wait. So at the open, if you see a stock that's gapping just above a flat 200, you want to upgrade the gap. Even if it's not a good gap, I'm still going to play it at the open. Okay? If it gaps well above it, then expect to get a pullback to the 200, and if it does, then you buy it at the 200. Okay? So use as a gap strategy. Number 3, use as a breakout strategy. Look to buy stocks that base at or near their 200 MA as soon as the rising 20 MA catches up and starts to curl up. When it starts to curl up, that's how you know momentum is picking up and the stock is about to break out. Look to short stocks that base at or near the 200 as soon as the declining 20 catches up. Very effective. This strategy here is very effective for long-term trading, for core trading. So check it out. Here's a stock that was basing at the 200. Notice, so take a look. It goes to the 200 and then comes in. Goes to the 200, comes in. To the 200, comes in. Right? Goes to the 200, comes in, and eventually, notice the moving average now, pointing up. Whereas before, it was just flat. It was totally flat. The blue line is the 20 MA. Started to point up. That's how you know it's about to break out. Now people will say, oh, those are low price stocks. Every stock initially is a low price stock before it goes way up. So this stock went from 2 to 8 in just 4 days. And notice here, basing at the 200, it actually broke out above it right here. So there was an entry right here, long, and another entry right here as a breakout. See it? Right at the 200 MA. It doesn't have to be below it or above it, but in that area. Now it's really nice when the stock hits it. This is the nicest, is when you have a flat 200, and I just want to show you real quick. When you have a flat 200 and a rising 20, and the stock is trapped between them. So flat 200, rising 20, so you get equal highs and higher lows, equal highs, higher lows, and eventually the 20 MA pinches the stock from underneath the 200 and it explodes higher. It just breaks out. So again, rising moving average, 20 MA, and flat 200. That's the best, but it doesn't always look like this. Sometimes it can be, like this. That's great too. Love it. That's wonderful as well. Notice the 200, the rising 20, and then break out and off to the races. Same here. 200 was above it and then gave you a pullback, and notice the angle on the 20 starting to point up. That's how you know it's about ready to go. And it doubled. Same here, same thing. Notice it was going through it a little bit, so that's a little more difficult. I like it to stay either above it or below it when it goes through the 200. But the point is, the area, if a stock is basing at the 200 on the daily chart, right, that area is just, that's usually where all big moves come from. I don't want you to believe me. Look at the charts yourself. Look at the beginning of any huge move and see where it came from. A lot of them will come from the 200. If a stock was basing, it'll be basing at or near the 200. Again, I like it when it bases just below it or just above it and then breaks out. When it bases through it, like so, it's more difficult, but still, it's in the right area. So what I watch for is I watch the 20 MA. I look at multiple time frames. I check the market to make sure, maybe to see if I can figure out, whether the stock, if I'm not sure about whether the stock is ready or not, then I start to look at other things. But the truth is, most of the time you don't need to. I mean, just look at this and look at the move up, big move up. Look at this. This is a beauty. This was RYAM, broke out. I played it. Notice the shakeout right here. Notice how it was basing under the 200, and the rising 20 was a declining 20, and then now became a rising 20, and then it broke out. It went to $30, almost $30. I think 29.50 or so. You can check it out. As I said, RYAM is the symbol. So that's how I use the 200 period moving average. Are there other ways to use it? Sure, but I just wanted to give you the top 3 ways to use the 200 period moving average. Do you want to get rich quick stock trading scheme? Well, then look elsewhere. Want unsexy but proven tips from a professional trader? Well, then I'm your guy. I'm sharing these trading methods for free in my ebook, Unsexy Trend Analysis Secrets that generate beautiful profits. This book is focused entirely on the same trading strategies that I use and refine every single trading day. Now, I'm not promising that these methods will make you an overnight millionaire, of course, but they are the foundational skills behind my many years of success and have benefited the countless students that I've shared them with. I can't wait to share my methods with you, and I know I will be hearing from you soon. Hit that link now.